What's up, guys? It's me, Alexander Jarvis from alexanderjarvis.com, and we'll be dealing with the marketplace financial model. Now, in this video, which is the first one of around 15, we're going to be going through what you need to know about making sure you understand how the model is generally working, your setup, and then we'll have a very quick walkthrough through the whole model so you get, a high-level view of what's in there and how you're going to approach filling it in. Now, in the next videos, I'll actually talk about how to actually approach filling this in, and then we'll be going through each and every single spreadsheet. So if you're wondering why I'm going through things quickly now, it's because this is just a quick intro. I've got a little checklist of things we're going to talk about, so if you see me looking down, that's why I'm doing that. So the first thing you're actually going to do is not even going to the model. What you're going to do is go to this blog, which I'll probably have emailed you to tell you to read. And it's called How to Fill in a Financial Model Template. How to fill in a financial model template. This is really important because you don't actually want to start modeling until you've actually thought through what you want the outputs to be. So you should have an idea of what you think your business should achieve if you're bootstrapping, or alternatively, what you think investors will want to see from your financial model, depending on what you believe your next round will be. And so you should really be thinking about what you will want to be showing in this model, which is a 3-year model in years 1, 2, and 3. How do you do that? Well, you want to be thinking through all the key drivers of your business and coming out with a scrappy outline, which you're going to draw on pen and paper. So rather than me explain this whole thing, I've written quite a long blog, which I want you to properly read, okay? And I'll give you a lot of insights into what you should be doing. But what the exercise, the outcome you'll be doing is this made up image, which I did literally on pen and paper so you can see, for an imaginary SaaS company. And so we're going to be setting out our goals here, what our CAC LTVs are, what packages we'll mainly be selling, what allocations of costs will approximately be. For example, saying that we want 40% of our raise to go to paid marketing is important, because when you're then dealing with your marketing sheets, you want to be budgeting how much you think you're going to be spending over your runway, allocating that, which will then generate your customers and your revenue over time. So having an idea of how you want to be allocating your spend, how much revenue, etc., you'll be generating is very important, so you can triangulate in the model to what you want to get to. Just going into the model, typing in stuff and seeing what happens is pretty ineffective. In investment banking, your boss will basically say, I want the company worth $400 million, and you'll figure out how to make that happen. All right? This is just the way the real world works, right? So read this blog, and I want you to literally write down on pen and paper something along the lines that looks like this. Now, for you, being a marketplace company, you'll probably start right at the top and say, well, how many suppliers, how many people on the demand side will I be having? Because marketplace is all about demand and supply, right? How many listings will be having? What are my revenue streams? What will be contributing to this? When will I start doing these things? At what point will I be generating revenue? How much rate will I be charging if it's a transaction business? Are there other fees streams that are coming in? How are you going to be thinking about your costs? Will you be doing customer care early or not at all? And all those cost deductions will then impact on ultimately your profitability. Typically, most startups, especially marketplaces, are going to lose money for some time. So have an idea of how much money you want to lose. I'm not joking. How many staff you want to have. And so when you're thinking of the people in your G&A, R&D, S&M, and other, how many people do you plan on having? Is it going to be 10 in the first year, 30 in the second year, 50 in the next year? And then how many people will be there? And don't worry, you don't have to have this perfectly. You just want to set up a roadmap of where it is you're looking to go to. So when it comes to filling in the model, you can iterate around it, which means starting basic and then getting more detailed over time, so it helps you get to the outcome you want, as opposed to filling everything in terms of what you think perfectly, suddenly realizing that, oh God, I need $5 million instead of $500,000, and then having to go do everything again. So when I do models is I just fill in a little bit and then improve it. See what happens. Is that my revenue, my transaction orders around right? No, we'll have to increase marketing spend or increase or decrease my conversion rates and keep trying to get to where I want to be. And when I'm pretty much happy with plus or minus 10%, I can fiddle around to get those extra 2% improvements or something. They'll never be right, but hopefully you don't want it to be wrong. And ultimately with your models, what really matters is your logic. And so when investors ask you questions, you have a logical answer for it. And it's not about giving, if it says, hey, Alex, what are your revenues going to be in year 2? You could say something along the lines of, well, that's not actually how we think about it. We think about the key drivers of our business because we know our forecast will be wrong. But the key drivers of this, in order to generate that revenue, will be all these things. And if we are able to, build up our bases, this will give more opportunities to generate revenue. And so it could be in the region between this and this. But our current plan is to achieve Y, which is a much better answer than saying 3 million. Because the investor's not actually asking you if it's 3 million. It's asking you why you think it will be that number. And so if you actually understand how you're achieving those things, you're going to be in a far better position. So the first thing that you're going to want to do is to read that blog properly and then make an exercise or write with this on pen and paper of what it is that you want to see. Now, what you could also do is maybe do the first, second, third videos, understand more what's in the model and what's expected of you if you don't really understand your business that well yet, because you're new and you don't understand all the metrics and KPIs around here. And then you can redo this exercise again. Potentially, maybe start filling the model and then do it. But at some point, relatively earlier on, when you want to be firming up what your model is going to show, you want to have these numbers pretty clear. And in the model, when you face reality, that's when you decide, well, actually, what I wrote in pen and paper just doesn't meet the real world. I have to change it up, at which point that's fine. The model is the one that you want to rely on. Okay, so make sure you read that. Now, let's go through. All right, first off, simple. If you're ever going to communicate with me, just let me know what version of the model. That's in the first page, or it's typically in the header, version 1. So the marketplace is currently in version 1. If people have got substantial changes they want to make, fine, happy to make updates. But this model is based on the last sort of 6-7 models that I've built. And so it's effectively taken all the learnings I've had over the past, 4 years and put it in. So this marketplace is arguably like the largest model, if not the largest that I have, and it can do a whole lot. So yeah, that's the version number, just in case you ever want to mention what model you're using with if you're going to communicate with me. If you purchase the blank version, that's fine. The one that we're going to go through right now is the filled in version, so you understand what the numbers look like. Obviously, you can use the blank version if you know what you're doing, or you've gone through the filled in version and want to go back, but that's totally up to you anyway. If you're on a PC, type in Alt-TO or go through your settings and get to your options. The first thing we would do is to make sure that automatic calculations are turned on here. Automatic, okay? Because if you got it on manual, what's going to happen is when you type in numbers, the model's not going to update. I try and not build my models with iterative calculations in them, but sometimes it's just no way to get around them. So generally, just make sure you have enable iterative calculations turned on. By default, most people don't. Now, if you want to get super nerdy and you've got a fairly decent computer like I do, go to advanced, right? Scroll down to here. So enable multi-threaded calculations. Firstly, click that. It's not normally on by default. And then click on use all processes on this computer. And then ideally shut down the other programs that you're not using right now. My models are big, and especially if you're using a ghetto old computer, you may struggle a little bit in terms of doing the calculations. There are hundreds and hundreds of thousands of formulas in this model. So give the computer your dedicated attention. If you're using a Mac, well, God bless you. Ideally just buy a PC because life will be a lot easier. It still will be okay. It's just easier and better to do things on a PC. Every single model has a general guide, which gives you some notes and pieces of advice on how to use it, how not to create issues, explain some things people typically ask me about, what all the sheets are in it. And at the end, we then have the cell types, okay? This is important to know. It's based on investment banking methodology, although this is my own. So these are for drop-down menus. What you want to be looking at, especially if you don't know what you're doing, is only touch any formula which has got a yellow box in it as an assumption. So if it has 60,000 little yellow box with the box around it, you can type in that. If you really do know what you're doing, feel free to change the formulas. Just don't come crying to me if you do something wrong. That's on you. Sometimes, mainly basically just in the staff sheet, there'll be a little box which looks like this. And that can be a place where you can type in the name of someone or what their title is, but it's in very few places in the model. Now, if things have green, right, you see a little intro exclamation point, that means they're linked to another sheet. All right, don't touch those. They'll just let you know that they're linked, right? And then formulas, which will be the most common cell you'll see, will just be black text. So this is what you're going to change. Big yellow, not hard to see. If you actually change any of the forecasts, copy and paste the formatting so that you can see that's an assumption. Because, like, for example, on my keyboard, I have, I've got a fancy one, I have the ability to control my media player, and it's just above, say, the star key. And so if I was to press play, I might accidentally hit asterisk, at which point, if that's a formula, it'll mess things up. So I'm just telling you, especially with big models, you need to be careful about what you're doing and you don't automatically make a mistake. If you do, what you just need to look for are precursors to outputs. If you see that your revenue is not making sense, your revenue or your costs not making sense, it could just be that you made a mistake by typing something in. So triangulate towards that and find it. So that's probably the most important thing you want to know, is what everything looks like. So if we look at, say, the P&L actual sheet here, we'll see yellow boxes, right? That's what you're going to take for your assumptions. Everything else is basically in black, right? Some places are in green, but all the formulas are in black. Next part we're going to deal with is how the general logic works for each and every sheet. So I've tried to make it as easy to understand how the sheets flow in and out together. So we say link assumptions, you see here. These are all green, or occasionally I do formulas to make the calculations a bit faster. They link into the sheet here. The summary links to out other sheets, and then below we have assumptions and calculations which feed into your summary. We'll see the same thing in, say, your staff sheet. We've got a guide at the top, then we have the link assumptions. We're linking in, and it says linking out. Sometimes I change it up because it's easier to follow it that way. Then we have the summaries, and then we're going to have calculations, right, which feed into the summaries. Yeah, what I've done is take great pains to, again, all of this is based on how we do things in investment banking because, you know, we do it best. You can see the annuals here in cells E, F, G, and then the calculations for the month start in I and end in AR. So everything, if you're ever checking cells, should be an I, if it's an I, right? Every single sheet, with exception sometimes like KPIs, because it doesn't make sense, well, that's fine. Or source and uses maybe, are always in exactly the same place. And that's so that you can order things properly. So see here, everything is an I. Sales and staff, everything here is an I. Okay, next thing, you'll notice that there are these little boxes here. If you don't know, you can automatically ungroup everything by clicking the largest number, or scaling things down, or putting them all nice and small. Sometimes I've built in ways and means by which you can have basic and more complicated versions. So if we say the staff, you can see that here we've got basic and we've got an advanced or detailed version, which is grayed out and it's controlled in a sheet, which I'll show you in a second. We'll see here that the detailed one is all grayed out because you want to use the basic version. So we're going to hide that. And what we're going to use is the basic version. So we ungroup that, and that's what you're going to fill in. So if you want to then at the next level group those up, you can. But that's what you're going to focus on. So use groupings as you need. Sometimes it can be beneficial just to see a specific aspect that you're looking for. But it's also useful then to hide the different variations of things, which also applies for, say, some of the marketing sheets. So that's groupings. You'll also notice what I've done is I've color-coded the sheets. So P&L are in similar colors. Your expenses and staff are in similar colors. Then your revenues and conversion sheets, your marketing sheets are in different colors, but similarly shaded so that you know what they are and just more quickly kind of see what's going on. Something that everyone seems to love, which I'll just let you know about, are Sparklines, say the KPI sheet, which is, I don't know. KPI sheet, so we see here, I apply Sparklines everywhere, and so you can immediately see the trend for the entire line. We've also got conditional formatting, which I guess I'll address in a second, but you can basically see for this whole curve, what does it look like? It starts low, it goes up, it goes spiky. Why is it spiky? Those are the things that you want to check for, but so long as the lines are as you expect, that's fine. But these Sparklines are useful to get a quick overview of what's happening. And if something looks weird, then you can go investigate. Now, what I've done is apply conditional formatting so you can see the high and the lows. and that helps you more quickly identify if there's something that may not make sense. And so things generally trending down, so they're blue, and then they're higher at the start. That could imply that you start out with higher costs, and those costs come down because of economies of scale. But look at those numbers, are they red, are they blue? And make sure that they're generally trending in the right direction for what it is that you're expecting. If they don't, again, go investigating. So Sparklines. It's a big model, and it requires time. So what you highly recommend you to do is to save regularly, especially if you're doing a lot of changes. Change every 15 minutes. If you're just going through things and not changing a lot, maybe do that every half an hour. You're taking a bet on potentially losing your work if Excel has a conniption, which it does, by the way, and shuts down. Again, please bear in mind my models are large, and I'm telling you this for a specific reason. So what you need to do is save that as a new version, and so you have backups, right? And so let's say even like a file corrupts for some reason, you have backups and that you can go back to in case you did something terribly wrong. And bear in mind, when you press save, it basically deletes your cache of undos, right? So maybe you're playing around and accidentally press save. Well, you can't undo what you've done. So again, you want to have backup versions. Since I do this so strongly, I created an add-in, which allows you to swap currencies, which I'll address, but you literally click save model version, and this will create a new version with your old version backed up and the enclosed and opening up the new version of it. And so literally all you need to do is you click on my 50-fold add-in, which you can purchase at the site, by the way, just to be very clear, and you just keep on mashing save model version every 5 minutes, every 10 minutes, every half an hour, every hour, depending on how much work you're doing, and keep on creating backups. I mean, these days storage is cheap, so there's no reason not to keep creating backup versions. Like back in the day, I had this girl working for me in banking, and she spent 2 days building a model, and I came into her, I think, on Sunday night, and I was like, "Why are you still here, Victoire?" And she was crying. And I was like, "What's went wrong?" She says, Windows crashed or something, and she just lost all her data. I was like, "Well, what's the problem? You've got backups, right?" He said, "No, I'd never saved it." I kid you not, that's a real story. It is so important to get in your head to keep saving versions and keep saving a model. I promise you, I've lost countless hours or even days by not doing this properly. And that's why I've spent so much time explaining this to you. So keep on saving regularly. Now let's just go through the model at a high level so you understand what's going on here. And so we'll go through every sheet. So the first one is just a legal notice. Basically means don't steal my stuff and give it to all your friends. You've got a cover, which you can use yourself if you like. You can delete it if you want. I don't care. Nothing's linked to it. You've got the intro, which you can read. You should read. Now, how's the model linked together? Okay. So basically, it's very forecast orientated in the model. The actuals are going to feed into your P&L combined and occasionally in one or two other places, but not so much, mainly just the number of customers so that it builds on, so you can potentially generate more revenue from existing customer base. Basically, everything really goes into the P&L forecast because that's what the model is about, forecasting. So what you're going to do is generate traffic for marketing. Then it's going to create registrations of people who sign up to your site, and then it's going to create revenue from your customers. Okay, so traffic, register, customers, revenue. There are ways and means of messing around with that funnel, but that's typically the way you should think about it. So the marketing sheets, so emails, channel sales, paid organic, blogging, and social, all are channel traffic generating activities. Channel sales is a little bit different because of difference between CPLs and CAC's versions of how you're going to be acquiring people. We'll cover that later, but typically they're all traffic generating. These are going to drive into the marketing sheet, and you're going to create the first level of the funnel, which is the conversion from traffic to registration, or think of it, say in SaaS terms, a trial on your site. From there, they're going to then go into the registration sheet where you make some assumptions, and then they will convert into customers. And then on both sides, you're going to have the opportunity to generate revenue, both on the supply side and the demand side. That will obviously feed into your forecast sheet, KPIs, and as needed. Staff are obviously going to be a large component of your business. We have for the sales staff and your other customer care, customer success staff and support staff, automations so that you can scale up and down as needed without having to keep changing the number of people there. And those are going to feed into your staff sheet, which as expenses are going to be leading into your P&L forecast. So between the staff and expense calcs here, that's going to be almost all your costs except for, the paid aspect here. You can calculate your depreciation and tax. You don't even have to look at the sheet if you don't want to. Again, it's investment banking style. KPIs, and then the P&L combined just takes the actual and the forecast and shows it. So let's say you have actuals for January, February, and March, and forecasts from April. The actuals show the first 3 months. The forecast will have 36 months of forecast, and then the combined will have 36 months of columns, with the first ones being January, February, March coming from the actual, and then April on from the forecast. And so you can see the progression. All right, so those are all the high-level overview of how everything is connected. Now we have a formatting sheet here. You will verily have to go into here. Let's just start off with your tax rate. You're going to have, say, 12.5% tax, say, in Ireland, or 20% state and federals, whatever it is in America. Just put it in. That's that, okay? I build on my models in US dollars because investors understand it when it's general language of commerce these days. I have a blog on this called Why to Use Dollars in Your Startup. I recommend reading that. I'm not going to go on about it because I've already explained it before. If you want to change the model into another currency, though, you can get that macro, 50-fold macro, and you can change the currency. All you need to do is pick from the drop-down menu of these currencies. I think there's 17 of them. Pick the one you have, say, I don't know, British pounds, and then you just click this button, and it'll take a couple of minutes because it's a big model, and it will change all the currency symbols from dollars to pounds. And then that's in, okay? You can change it back in if you want, again, using the macro by changing it back to US dollars and pressing this button again, and it'll change it all back again. You don't have to use it or not, but I just built it because I've had a lot of people asking me over the years, I want to use krona or euros or whatever it is, and you can do it with my model. Now, the one time you really need to take this model seriously is starting out with what month are your actuals going to start. Now, if you have 3 months of actuals, well then you're going to put this as the first month that you want to start, say January. Okay, so we'll say, for example, if it starts in January, 0101. Now, we have 3 months of actuals, and so this is going to start on the 4th. Okay, January, February, March. Therefore, April is the first month of forecast. 1, 2, 3, 4. So you see 1, 4. And then if you have, say, you've been fundraising for another 2 months, then you can add another 2 months to this, because now you have January, February, March, April, May as actuals, and then your forecast is going to start in June. So you can see here, if we look in the actual sheet, January, February, March, April, May, we have 5 months to fill in, and then in the forecast sheet, the first month is June, right? It says June, Jan. I'm going to put this back to what it was, just in case something doesn't work because of it. But that's all you need to do. The other thing you'll only do once, unless you're doing something strange, is setting what your year end. So in this example, I think it's August. Many people might have a year end of December. Now, the reason why this matters is because we're going to have a differentiation between your P&L, like in GAAP or IFRS terms, and what your operating cash flow is, okay? So as a founder, all you really care about is when cash comes in and when cash leaves your bank account. That's because that's all you care about. Of course, accounting land does things differently, so we have taxes and depreciation, and we have to do accruals. So also, if you set at month 12, December, or however it works, that's your year end. Therefore, your bonuses will be paid once a year at that date, but you will accrue them in your profit and loss. Okay, and so that's the main reason why you want to be thinking about that year end, is when are you actually going to be paying out these cashes. So that's the last thing you'll be filling in here. So make sure you do this properly, and you never really need to look at it again unless you want to change your forecasting date. Or you go on a year and you have up to 11 months to show in your actuals, and then you'll want to reset this back again to the date that you want to be showing it. So the control sheet is something we'll be going in a video. Hopefully I've made it as simple as possible, but it might be a little bit complicated for you to understand. Basically, you can decide if you want to have a basic or a detailed version of the sheet. Sorry, my nose is itchy. I've got some sort of talcum on it. You can turn certain sheets on, such as your sales staff or support staff, so you don't have to worry about them. They just all get grayed out. You can choose what revenue streams you have. Again, they get grayed out, so you don't have to see them in the model or be aware that you need to fill them in. You can choose the approach you want to take to marketing. So I enable you to either use a complicated version, which has lots of sheets, or you can just do a ghetto version so you don't have to think about all that stuff. Or you can create ratios to supply and demand, meaning that you can do complicated calculation on the supply side or the demand side, and the opposite just as like a ratio of say 1.5 or 2 to 1. So you focus on demand side while you do that in detail, and then just assume that you're going to acquire suppliers in a ratio as and when needed to optimize your liquidity. Now, I built in multiple versions because I know some people don't know what they're doing, or they don't want to put in the work, or the business, the way that they think about things is slightly different. And therefore, I just enabled you to decide if you want to be doing things more complicated or more detailed. So that's a decision you need to make. One thing you could approach is, say, just picking manual supply and demand side, just keeping things simple because there's a lot to learn, seeing the things approximately work, and then you can choose to do the full version and transpose those formulas out and build them out. And then finally, on the marketing side, again, you can have a basic or a detailed version of this if you're using marketing sheets driven, and turn these sheets on and off and they'll get grayed out. But I'll cover this in a video, which I think is the one after next, so that you can understand how exactly this works. Now we've got the P&Ls, actuals. Again, there's numbers that you have to fill in. You may have some difficulty doing some of these numbers because you probably don't calculate them this way, at which point maybe just put them in a line and it showed the evolution slightly differently in one key. But ultimately, if you can't output those numbers and aggregate them the way that I'm forecasting the model, you can't do it, right? So it's something you'll just have to deal with. But ideally, if you can aggregate your numbers into how I structure it, then it'll just flow through. But the actual sheet only feeds into the forecasting of the model in maybe 2 or 3 places. So really what you want to have the actuals is to show the progression in the P&L combined, so that the numbers go from this month, and continue on as in natural progression, so there's no weird jump ups or anything. But so it doesn't go 0, 0, 0 and then 214. So you're going to have to fill in this properly every single month that you want to add in. As the model goes on, you need to add this in again. But hopefully, if you know how to get the numbers, you know how to get the numbers easily. So this may be hard for some people who've got crappy business intelligence. It'd be hopefully simple for people who do. P&L forecast only has a couple assumptions. You put in your forecasting rates, your discount rates, etc., and you're pretty much done. There's only about 5 numbers that you need to put in here. P&L combined is just going to take the two together and show them in a progression. Depreciation tax will cover, but basically it enables you to do more funky calculations around your depreciation, as well as your tax calculations, including adding things like net operating losses if you understand what those are. But for most people, you don't even need to look at this sheet. This P&L for deck, I don't care if you use it or not. I just made it as an example. Source and use is something you can do at the end of the model, and I'll help you think through how much you need to raise, how much runway you'll have, and possibly create some charts which you can put into your pitch deck. The chart sheet is pretty self-explanatory. It's just every single chart in the whole model in one place, and you can use this to investigate if there's any dips or weird bumps, that things go in the order of in the right order of magnitude in the right direction, just to check things out. KPI sheet is one of your best friends. You're going to use this throughout the entire process of making the model to make sure that things are making sense. So typically starting at the top and moving down to the bottom, because we've got revenues and we've got costs. But you start out making sure your costs make sense, and then your expenses make sense, and these all ultimately balance out. Where are you allocating your spends, and what are your drivers on either side? What are your metrics, LTV, CAC ratios, etc. Headcount. But this is the sheet that I would personally continue to keep on using, and then as an investor would probably be the main thing that I would spend my time looking at to make sure that your model made sense, without having to get into all of the details. Your expense calcs are principally going to be your payment costs and your tech costs, server costs. It's relatively simple, and obviously those scale up depending on where your revenue is. In your staff, there is a basic and there's the detailed version, which you can turn on and off depending which one you want to use in the control sheet. So we've got basic, or we've got the detailed version. In the basic version, basically it's a lot faster to fill in. The detailed version obviously is more detailed. So here you can just allocate when you're hiring new staff, how much the cost of all these people are going to be, assumptions for the automated parts, bonus calculations and the like, which go into the P&L forecast sheet, any other onboarding costs or other costs that you have, and basically the detailed version is a larger version of that, but we'll cover it in another video. So for the support staff, we've got automated calculations for both the supply side and the demand side. This is going to be your customer care staff and customer success staff for both sides. And then we have automated calculations on the supply side for your sales staff. Now, I presumed that since for most marketplaces, you're not really going to have salespeople on the demand side. We're going to have them on the supply side. So we'll make assumptions here. And then depending on how you're going to scale your forecast, you may or may need more sales staff. We have two sheets, one for the revenue side, one for the demand side, to be forecasting what your revenues are going to be. We can see you've got transactions, affiliates, members, listings, and there's lots of assumptions in here. We'll cover these in new videos. I want to make this video a little bit shorter since we've already gone over half an hour. We'll be doing the conversion rates from on both sides, supply and the demand side, of how we're going to convert our registrations into customers over time and which will be self-supported or not. And the registration sheet will be turning our traffic into registrations. Again, that will depend on what version you're using. And then we've got the marketing sheets, all these, which we'll go through in detail, which again, if you're using simple versions, you won't actually need. Yes, that was, well, a sort of quick overview of the whole model. I know I started slow and I went faster at the end, but we're going to go through all of these sheets throughout this course, sort of relatively line by line. So this video is not meant to explain how everything works, just a general overview of what's happening. Hopefully you have that now. So the next video, I'm going to talk about how I would approach actually filling in this model, and then we'll be going through all the individual sheets. All right, guys, bye.